Hey, what's up, my friend? So in today's trading, you will learn the truth about technical analysis that nobody tells you. Because let me ask you, have you ever come across books, textbook, or from gurus telling you things like buy when the price comes into support because the market is going to bounce up higher? Or sell, right, when you see a shooting star pattern because the market is going to collapse lower. When you see a hammer, knock, buy because the stock is going to blast off higher, right? You know that that's not the truth because trading isn't as easy, right, as what it seems, right? Because from the moment you buy to the time you sell, the market can throw 101 different patterns at you and you get caught off guard. So this is why in today's trading, I want to share with you, right, the truth about technical analysis, why traders lose money, right, with it, and more importantly, how you can avoid it, right? So all this and more, let's get started. First, let's talk about support and resistance and the truth behind it, right? So when traders deal with support and resistance, this is their expectation, right? Let me explain what I mean, right? So they will draw their support on the chart, they draw their resistance, and then they see how the price goes up, comes down, goes up, comes down, goes up, okay? And this is what they expect support and resistance to be like, right? Price comes into support, it bounces up higher. Price goes up to resistance, reverse down lower. Alright, and what happens is that when the price breaks out of resistance, they will say, oh man, Rayner, resistance is broken, time to buy the breakout. They buy the breakout and the next thing they know, the price collapsed down lower and they get stopped out. Then they see that, hey, the price has now broke below support. This market is going to collapse down lower. Time to short this market, sell. What happens? The price then rally up higher. Now, what's going on, right? What's going on over here? And has this ever happened to you? And if you answered yes, right, then you're not alone because this is what a textbook teach you of how support and resistance should be like. But in reality, it's not quite like this because in reality, right, support and resistance is more of like what I'm about to show you right now. So support and resistance, right? So let's say, for example, the price goes up, it comes down, it exceeds the high over here, comes back down lower, exceed the lows by a little bit, and then rally up higher, and then kind of like get stuck in this range. So when you draw your support and resistance, don't draw them as a single line on your chart. I mean, you can draw them as a line on your chart, but treat them, right? More importantly, treat them as an area on your chart because that is what support and resistance is all about. They are areas on your chart, something like this. This is an area of resistance. This is an area of support. So when you treat support and resistance as areas on your chart, you don't get fake out as easily because you know that those are areas on your chart. Just because the price exceed resistance by 1 or 2 pips or 1 or 2 ticks, it doesn't mean that the resistance is broken because the price, right, could still reverse down lower from that area. So this is the reality, right, of trading and drawing or dealing with support and resistance. So if you don't see a chart, it looks something like this. So when you draw your support and resistance, right, you can draw as lines perfectly fine, but treat them as areas. So in this case, I've highlighted them as areas on your chart. You can see that this is an area of previous support which become resistance, right? Notice this is an area of resistance. Price reach this highs, head down lower, then price head up higher, taking out this highs before it heads down lower once again. So same thing over here, right? Previous support which could become resistance, price heads up higher, previous support which could become resistance, price heads down lower, then retest this area of resistance, didn't quite reach this high over here, and then it collapsed down lower once again. So this is the reality, right, of support and resistance. They are an area on your chart. So the lesson is this, right? The truth behind support and resistance is treat them as areas on your chart, not a specific line. Now, the reason why support and resistance are areas on your chart is because, right, it is pretty much dominated by two groups of traders in the market, the cheapo traders and the FOMO traders. Let me explain. So cheapo traders, right, are traders who want to buy the extreme low of support. Man, right now I'm going to buy the cheapest, the best, the lowest price. That is me. I'm the cheapo trader. So they want to buy the extreme lowest price. That's the first group of traders, the cheapo traders. On the other hand, you have another group of traders which we call FOMO, right? Fear of missing out traders. The moment the price comes into support, let me quickly buy right before the price rallies higher, right? I'm going to buy right now before I miss the move. So there are these two group of traders, right? The cheapo and the FOMO. And here's the thing, right? You have no idea which group of traders will dominate. Sometimes it's the cheapo, sometimes it's the FOMO. So this is why support and resistance, they are an area on your chart. The price sometimes could just touch support and then quickly rally higher. Sometimes the price could come deeper into support before it rallies higher. All right, so you can see these are the two group of traders at play which result, right, in support and resistance being areas on your chart. Number 2, the truth about trendline trading. So have a look at this, right? This is what traders expect, right, when they deal with trend lines. They look at the chart like this, and then they draw a trend line. Oh, look, Rayner, it tested once, 2 times, 3 times. It's gonna test to the exact peak over here, Rayner, before this currency pair reverse down lower. And then reality hits, right? What's reality, right? You get something like this. The market reverse exceeds your trend line and then shows signs of reversal. And when this happens, what do you do? This is where you shift your trend line. So notice over here, you start shifting your trend line. I've shifted as an example over here for you, this red line. You shift your trend line out further to take into account this recent move. And what's going to happen is that, as the market keeps breaking your trend line, you keep shifting your trend line. Can even, go to, like, in future, let's say an example could be like this. Shift out even further as the market, let's say the price goes up even higher and reverse, your trend line keeps shifting out further and further. So what do you do, right? How do you deal with this issue? Well, here's the thing, right? Trend lines, right, they are similar to support and resistance. The only difference is that instead of drawing horizontal support and resistance, trend lines are pretty much diagonal. So what you can do is to treat trend lines again as an area on your chart. So in this case, what you can do is to draw trend lines as an area. So in this case, you can see this is an area on your chart where you can expect selling pressure. Don't draw it, or you can draw it as a line if you want to, but treat trend line as an area on your chart. In fact, I think it's better if you call it trend area, right? But they call it trend line. So anyway, this is what you can do, right, to kind of like overcome this problem. So remember, right, the truth about trend line is this, right? Trend lines are diagonal support and resistance, and they are pretty much areas on your chart as well. Moving on, number 3, the truth about breakout trading. And by the way, if you're enjoying this video so far, smash the thumbs up button. If not, then hit subscribe. Cool? Then let's get started. So for breakout trading, right, the expectations for most traders look something like this. They look at this chart over here. Hey, Rayner, look at this market. It's in an uptrend. Look, Rayner, previously the price broke above this highs, it rallied. Broke above this high, rally. Broke above this high, rally. Right now, it broke above this high, it's gonna rally. That's the thought process, right? Because, over the last few, maybe months of this chart, this stock is in an uptrend. Every breakout seems to be working out in your favor. So you look at this, man, it's time to buy. So you buy the breakout. And then what happens is that reality hits, right? When you buy the breakout, this market somehow knows that you're buying the breakout over here. It quickly reverses against you, right? And collapse lower. And now finally this breakout has failed, right? The moment you decided to give this a shot, right, to go long, right? So that's the reality, right, is that anything can happen in the markets. No matter how great a chart looks, no matter how good the trading setup is, no matter how many stars are aligned, Pluto, Mars, Venus all aligned, the trade can still go wrong. So this is the lesson behind it, right, is that the truth about breakout trading, or rather can also be applied to pullback trading, reversal trading, or any form of trading is that breakouts can fail, right? Anything can happen in the markets. Any type of trading setup that you're looking at can fail in the market. So it's very important to cut your loss and move on. Imagine this, right? Imagine you're dating a girl, okay, and you are texting her. She always texts you back, reply you very fast. Her messages are very long. She always initiate conversations with you. You bring her out to dinner. She dress up beautifully for you. And one fine day, right, the girl invites you back to her house. In fact, you guys are now in her bedroom. And what happens is that she starts to undress, and you get ready, to get the groove going. And when she undressed, you saw that something's not quite right. There's a little cactus on her. There's a cactus. And that's not quite right because, you're expecting to see a camel toe, but you see a cactus. Now, at this point, what do? Do you pray, oh my, can you please turn it into a, cactus to a camel toe? No, all right? Of course, you probably, cut your loss and move on, right? Get out of the room, right? Because clearly this is not what you expect, right? Clearly you have been proven wrong. And it's the same for trading, right? You can get the best trading setup, the best chart pattern whatsoever. All the stars are aligned, Mars, Venus, Pluto, all aligned. And the trade can still go wrong. And when it goes wrong, do you pray that the market reverses back in your favor, or do you cut your loss and move on? I hope you cut your loss and move on. And that's my point, right, in this section over here. Cool? Okay, so number 4, the truth about your trading entries, right? Here's the thing, right? So if you look at this chart over here, this time let's talk about pullback trading. You can see that this market is in an uptrend. It makes a pullback towards this area of support, right? And you have a valid entry trigger to go short. In fact, this is what we call a false break, where the price took out this lows, right? Let me just highlight that in case my doodle gets in the way. The price took out this low over here, right? Took out the low and then quickly reverse up higher. So this tells you that there's a false breakdown towards the downside. So you go long, right? Thinking that hey, this market could possibly reverse up higher. So that's your expectations. But the truth is, in reality, right, what could happen is that, or rather, often it could happen is that the market gets you long, right, suckers you into the trade, and then it reverse against you, hit your stop loss before it starts to go in your favor. It could happen. I'm sure it has happened to you before. Okay, that's the reality. So what's the lesson over here? Right, since we can't change reality, the lesson here is relatively simple. Is this, right? Is that when you are trading, right, you want to expect that the market could possibly hit your stop loss, right, before moving in your favor, or rather the market could possibly move against you before moving in your favor. So what you want to do is to make sure that your stop loss is set a distance away from price structure so you don't get stopped out prematurely. How you do that is relatively simple. So let's say if we are dealing with, how about support, right? So let's say the market is in support in a range, okay? Then let's say you buy at the lows of support over here, market rally up higher. Don't set your stop loss just below support, because you know support is an area on your chart, because what could possibly happen is that the market could trickle down lower, hit your stop loss, and then rally up higher from there, because after all, you know that support and resistance, they are an area on your chart. So what you want to do is to set your stop loss a distance away from support, a distance away from it. So ideally your stop loss is, let's say, somewhere over here. So because you know that if your stop loss is here, let's call it SL, if the price hits your stop loss, probably support is likely to be broken and you want to get out of your trade, right? You don't want to set your stop loss at a level where if the price reaches it, support could actually still be intact, because if that's the case, then why is your stop loss at that level? So the key is to set your stop loss a distance away from price structure, away from the noise of the market, so you don't get stopped out of your trades prematurely. Alrighty, so number 5, the truth about reversal trading. So what traders expect, right, when it comes to reversal is that, you know, reversal are going to be swift, it's going to be fast. So for example, the market reverse down lower, boom, right, quickly reverse up, breaks out the previous high. Market collapse down lower, this is during the COVID, right, on the S&P 500, boom, right, market reverse up and breaks out above the all-time high. Now, this is kind of like, you know, what traders expect. You know, reversal are usually pretty swift. But the truth is, right, reversal, it can take time. So let me just take you back to, you know, during the September 11, right, the attacks in the Twin Tower. So you can see over here, the decline, right, took about 931 days. So basically from here all the way down to here, the decline in the stock market was about 931 days. And for it to retest, right, the previous highs over here, right, this took the stock market 1,834 days as shown over here. So basically from here all the way up to here, it took 1,834 days for it to reach back the previous all-time high. Another example, what about the 08-09 financial crisis sometime about 10 plus years ago? You can see over here, the decline, right, took about 511 days from here, okay, all the way down to here. The stock market took 511 days, right, to reach the low, to bottom out. And for it to reach back the all-time highs, it took 1,491 days from here to go back to the all-time highs over here. It took 1,491 days. So the reality is that, you know, reversal in the market is not always that swift. You know, come down lower, boing, break out all-time high. Come down lower, boing, breaks out all-time high. No, sometimes it can be a slow grind up higher to reclaim back the all-time high. So please, right, bear that in mind, right? Not everything is, you know, is fast and furious. Yeah. So the truth about reversal trading is this: is that, you know, reversal, it can take time. And by the way, if you find that this type of trading methodology has, you know, too much, you know, ambiguity, subjectivity, and it's not really to your liking, then I highly recommend you consider, right, systems trading. This is a trading method, right, which allows you to generate an extra 10%, 20%, or even 40% a year without analyzing financial reports, studying chart patterns, or following the news. And in fact, right, in my upcoming web class, I'll even share with you a proven trading system, a stock trading system that has generated 3,225% over the last 22 years. And also, even if you have a small account, I'll share with you how you can take a small account and grow it to 7 figures and beyond, right? So all this and more in my free upcoming web class. If you're interested, I'll put the link somewhere below this video, and you'll come to this page that looks something like this, right? This is the page. So all you need to do is just fill in your details, your name and your email address over here, right? And then you just click this orange button over here, right? And you're pretty much good to go. So the next event is in June, but we'll hold this, you know, once a month. So in future, if you come in during July, August, whatsoever, right, there will be a new date for it as well. So go and sign up for it, right? If you want to learn how to trade in a very systematic manner without subjectivity, ambiguity, and whatnot. So with that said, I wish you good luck, good trading. I will talk to you soon.